Hello guys, welcome back to another Lumley trading video. In this one we are going to be looking at GNUS because people are kind of wondering what's happened with the stock today, and it was quite simple. All that happened is it had a 1 for 10 reverse stock split, and all this basically means is a stock will say worth 40 cents, it does a 1 for 10 and then it becomes worth $4, which is basically what happened. It must have been around, considering the open, actually we can see where it was at yesterday's close. Coming into yesterday's close, it was valued at 432. So which this basically means is it was worth around 40. I think that's about 44 cents. And then a 1 for 10, so now it becomes nearly $4.40. Obviously on the open, whenever you see a stock do a reverse stock split, you tend to see the reaction to that strong downtrend, and the reason for that is the only reason a stock really does a reverse stock split is if they are at fear of kind of getting delisted. Because again, if a stock declines so much, there's only one thing they can do to stay listed, and that is really a reverse stock split if they can't turn the company around and get investors to kind of do it naturally. So it's basically just an artificial way of staying on the market. So that is kind of what happened, and most likely why we had quite a lot of volume, or why we had a lot of volume coming into the open. But what are key levels and we can be looking at going forward? So what we are seeing over on GNUS is coming into kind of key levels, and we saw that even intraday today. So at 337, this is our second deviation over on the 1 year. And what we can see, as we would expect, really, you come down to this level, you get that bounce, and that's really how we look to play these levels. The first time you come into them, at the minimum, you expect a bounce, or you can call it a pullback. Downtrend, you get that pullback. That's what we look for at a minimum. Then once we're in the money, what we usually do is just move our stock to break even. If it comes back down, okay, cool, we stop out the rest of it at break even. Otherwise, we look to play the overall reversal, and that's really going to be the home run trades from a technical standpoint. So that's really how we use these levels, or at least personally, I use these levels, and we can see now our target from that is really going to be around 415. So again, I would have been locking in some profits already because we've had the bounce, which is what we, 95% of the time we're going to get that bounce. We know that's going to happen. We want to move our stock to break even, so our high, we win the majority of our trades, but we still don't want to be cutting off profits instantly. So we lock in some profits, let the rest run, and try and hold it in, and kind of it goes back to around 415. But if we do break or kind of continue to the downside, we'll stop out the rest break even if we got into the trade, and then we'll be having our next support around 320. This is our third deviation on the 6 month. Get a high probability bounce location. The first time we come into this, what I'd be watching for is a bounce, and then to at least kind of 337. Again, that's where I'll be looking in some profits, moving my stock to break even. If it comes back down, I'll stop out. If it continues to bounce, trying to hold into that next deviation, which again, probably use around the 415, because then we can get quite a good move on that. If it did continue down any lower, we do have further supports at 223 to around 212. These levels are quite close. Use that more as a zone than an individual level, and really that's what you could have done today as well, for around the 340 to around the 320, because they're so close. You can use it more as a zone, getting some size on that first line. If it continues down, we're getting a bit more size on the second. If we only hit the first one, then okay, cool, it bounces, we lock in some profits, kind of negate the second one. But again, it's just how you want to be trading them. That's all down to personal preference, if trading them at all. And we do have one final support around 90 cents. So these are our key supports. But again, personally, when I'm trading these kind of weak stocks and these small caps in general, I'm not looking to buy them at the lows and sell them at the highs. The way I prefer to trade them is waiting for them to become overbought, and then really just getting them short buys, trading the overall trend of the stock. It just makes it a lot easier, and when they're at the low, they can easily continue. You don't really know how long you're going to be bag holding, if you're ever even going to be able to get out at a profit. Whereas if you're buying at the highs, it's a lot easier to kind of, especially if they have options, kind of do a credit or debit spread. But if they only have outright shares, trading on the intraday when it's coming into these levels, a high probability way of looking at the stocks. So if we do continue high, we do have a resistance at $5. This is our first deviation still over on the 6 month, but really where I would start being a lot more short bias is coming into around $7, because that is our first deviation on the 6 month, and also our first deviation over on the 1 year. Well, that's actually at 710, but again, use it as a zone because it's so close. but really this is what I'd be paying a lot more attention to, and where if I'm trading it, I'm waiting for. Until then, I'm probably not going to touch this stock at all. But when it comes into here, short bias, if we break that, we're looking at $8, then $8.35, going on to $8.90, going on to $9.50 to around $9.87. Again, quite close. You can use that more as a zone than individual, and a final level at around $11. So that is the overall breakdown on GNUS. If you did enjoy the video, why not drop a like and subscribe and check out this analysis video.